let's talk about what's been happening in crypto this week. On the 20th of July, the US Treasury Deputy Secretary, Michael Faulkender, projected that stablecoin demand could reach the trillions, underscoring growing integration between traditional finance and crypto. The statement highlights official recognition of stablecoins' rising role in global payment systems and financial infrastructure. More and more people see stablecoins as crucial for cross-border payments, remittances, and reducing frictions in banking settlements. The US is continuing to debate crypto regulatory frameworks, especially around stablecoin issuers. It also fuels ongoing policy debate over potential CBDC's introduction in the US. The markets interpreted the statement as both endorsement and a warning, raising expectations for increased regulation. The industry is concerned that the absence of clear federal rules could push innovations overseas. Stablecoin market cap and transaction volumes saw a moderate uptake following these remarks. Also on the 20th of July, we saw the Australian Federal Court rule in favour of Finder.com and its crypto yield generating product, Finder Earn, after a 3-year legal battle. The court concluded that Finder Earn was not a financial product. The decision clarified legal status for yield-based crypto products in Australia. This ruling could set a positive precedent for similar products, reassuring fintech companies and investors. Australia has always been a bit slow when it comes to innovation and regulation. The ruling was a surprise, as Australia has never been the most crypto-friendly country. The result of this ruling is a great step in the right direction. Hopefully in the upcoming years, we see Australia introduce more crypto-friendly regulations. The Australian Securities and Investments Commission had challenged the product previously for breaching consumer finance laws, but they lost. As a result of the decision, we saw renewed interest from local fintechs seeking to launch innovative crypto earning products. There was also a boost in confidence in Australia's emerging DeFi and Web3 sectors. Some analysts are anticipating further regulation and guidance from the ASIC, as the broader policy landscape for crypto lending and yields remain in flux. On July 22nd, Bitcoin mining firm Bitmine acquired over $2 billion worth of Ethereum in just 16 days. Previously, we've seen many companies start to add Bitcoin to their balance sheets. Companies are now also interested in Ethereum. The company stated that their goal was to stake and own 5% of the entire Ethereum supply in order to support its mining and operations. Institutional demand for Ethereum is seen as a high sign of confidence in Ethereum's medium and long-term viability. The acquisition took place amid growing talks of Ethereum's deflationary mechanics and rising on-chain activity. The Ethereum supply shock, which is driven by institutional buying, staking, and token burns, further tightened available liquidity. The move can be seen as evidence of a shift towards more complex crypto treasury management by institutions and miners. Other miners and large entities are expected to follow suit, potentially turning Ethereum into a preferred asset for institutional treasuries. On the 23rd of July, the US Treasury Secretary publicly advised against removing Federal Reserve Chair Jerome Powell during a period of macroeconomic volatility. Trump has voiced his opinion publicly many times about Jerome Powell, and it's no secret that he wants to get rid of him. A sudden change in central bank leadership could impact the markets heavily, not just the crypto markets, but all markets. There's also ongoing speculation about whether the US will cut interest rates and their effect on risk assets. Many investors saw the political statement as reassurance of stability for monetary policy. The Federal Reserve's policy and leadership has always been a key driver for liquidity and sentiment in risk assets. Stability in policy is essential for crypto adoption in the US. Obviously, broader macro uncertainty, such as inflation and regulation, is always a market risk, despite this signal of stability. On the 24th of July, the US Department of Justice is reportedly weighing criminal charges against employees of Dragonfly Capital for historical Tornado Cash investments. Tornado Cash is a privacy protocol which previously faced sanctions for facilitating illicit funds tracking circumvention. The potential action will result in further escalation in regulatory scrutiny against DeFi and privacy tools. The case highlights tensions between privacy-preserving technologies and anti-money laundering obligations. This could be a key moment in shaping the regulation for Web3 protocols operating in the US. On the 25th of July, Bitcoin's realized market cap surpassed 1 trillion. The realized market cap is often considered a more accurate measure of net worth valuation rather than just market cap, as it minimizes overstatement from illiquid, lost, or dormant coins. The realized cap milestone reflects long-term holders' growing influence on the maturing Bitcoin market structure. This is a very positive milestone, and it indicates increasing investor confidence and historical accumulation at higher price levels. The milestone occurred as Bitcoin continues to trade above 118K, even after a recent $9 billion dump by a Satoshi-era wallet. This milestone cements Bitcoin's standing as a major global financial asset. Some analysts see the milestone as a possible trigger for renewed interest from sovereign funds and pension managers. It highlights Bitcoin's emerging status as digital hard money for institutional portfolios. On the 25th of July, Coinbase announced a major rebranding and feature update of its base app, integrating Web3 platforms Zora and Farcaster. The SocialFi token surged over 400% following the news, illustrating the ongoing convergence of DeFi, social networks, and NFT platforms. It also highlights the growing role of centralized exchanges in onboarding mainstream users to decentralized applications. The upgraded app aims to simplify user experience for accessing Web3 protocols. Coinbase is heavily contributed to mainstreaming Web3 access and the tokenization of online community engagement. It's expected that further copycat integrations by other major exchanges will follow Coinbase's lead. Celebrities Hulk Hogan and Ozzy Osbourne have recently passed away. On the 26th of July, their deaths resulted in a surge in meme coins themed around their personas. Many meme coins dedicated to them were launched, and they experienced dramatic short-term price gains. It illustrates how crypto market sentiment can rapidly pivot to real-world cultural phenomenon, with new tokens emerging within hours. It once again highlights the risks of speculative meme coin trading. As a result of this, there's been renewed regulation calls for stricter oversight of highly speculative digital tokens. Crypto exchanges have faced criticism for facilitation and lack of due diligence on theme-driven tokens, and it once again sparks fresh debate over the role of meme coins in digital asset markets. Overall, we saw some pretty healthy correction in the crypto markets this week. XRP saw a 19% price drop, and Ethereum contract supply was further reduced, which was driven by token burns and increased staking, and Bitcoin continued to hover around the 118K mark. Analysts describe XRP's sharp move as a healthy correction, primarily due to over-leveraged long positions and regulatory uncertainty. Ethereum was subject to a supply shock, which was caused by rising institutional demand, on-chain token burns, and increased ETF participation. The majority of altcoins held steady. BNB rebounded after a major investment commitment, and HBAR surged following Robinhood's listing. The broader market cap dipped to 3.79 trillion, but remained resilient, highlighting the market's ability to recuperate. The events this week underline increasing institutional participation and the market's sensitivity to macro, regulatory, and protocol-specific news. This week's crypto price volatility was due to more technical and narrative-driven events, rather than fear-mongering or FOMO. Anyways, that's it from me today. If you enjoyed the video, make sure to give it a like. Let me know in the comments down below, what was the most significant piece of news for you this week? If you enjoy my content, make sure to subscribe and follow the channel. I'll be uploading more soon. As always, thank you for watching and take care.